In China, the coronavirus has hit the real estate market hard. How will it impact purchases of U.S. real estate by Chinese buyers? Jill Ji is a broker with Douglas Elliman.
In the short term, if we talk about the coronavirus, it's a travel restriction. They can't physically come here to visit the property.
Last year, buyers from China accounted for 13.4 of $77.9 billion of all foreign purchases of U.S. residential real estate. That's down from $30.4 billion in Chinese purchases the year before, according to the National Association of Realtors. The coronavirus will also add to a decline in Chinese purchases of U.S. commercial real estate. The numbers were already on the way down before COVID-19. So what further impact will the pandemic have? Jim Costello is the Senior Vice President of Real Capital Analytics.
The thing is, it may slow, but it's going to be difficult to disentangle how much of a slowdown in activity would be from coronavirus versus other existing challenges that Chinese investors have had. But then let's back up to a more secular trend. If we go back to 2016, that was the peak period for Chinese investment in the United States. In commercial real estate, that was about $19.1 billion in a single year. In 2019, there was only just over $800 million of investment. So there's a pronounced slowdown. So even if we have a slowdown in 2020, it's going to be fitting that existing pattern of just less and less Chinese investment compared to the peak. But the market is probably going to slow over the next 2 months anyway, just because of the challenges we face from the virus.
For residential real estate, the types of buyers from China has also changed. More are now taking out loans to finance the purchase.
Before 2017, even before 2016, even under $3 million price range market, there's still a lot of all cash buyers from China, from around the world. So these people, whoever needs to take a mortgage, get priced out, and the seller doesn't even want to consider sometimes the offer if you need to take a mortgage. After 2017-18, when the government posed a very strict capital restriction, now that they won't be able to move that much money outside China, and properties in New York are generally very expensive, but you need to have 20 people or 20 transactions to move that much money. It's become difficult.
And for buyers of U.S. commercial real estate, the investments they are making has shifted. In 2016, most invested in development sites where they could build condominiums and sell off units. But after 2017, the high-end luxury condo market began to get oversupplied.
It was a lot of money thinking that they could repeat some of the same business practices that they had in China, just take the development-oriented business model and just replicate it quickly and easily in the United States. And it didn't always work. Primarily, it was developers coming in thinking that they could build high-end condominiums and sell them off very quickly. And when it works, when the market's going up and prices are favorable and consumer demand for condominiums is high, that can be a very profitable business. But the game stopped.
China's Anbang Insurance Group's purchase of the Waldorf Astoria Hotel for a record $1.95 billion was the poster child for this type of risky investment. But after a 2015 crash in the Chinese stock market, and with concerns about their debt-laden economy growing, China increased capital controls to restrict overseas property deals.
The Chinese government stepped in to tell the investors in China that some of them were just being too speculative and taking on too many risks, and wanted them to pull back on those type of speculative investments.
But development sites are still in the mix. In 2019, Chinese investors spent $3.3 billion on such sites, and they've begun to move their focus from the U.S. back to Asia. Hong Kong and Japan were the leading destinations for mainland Chinese investors last year. In the short term, Chinese government regulations on outbound investment and now the coronavirus will have an impact on the U.S. real estate market. But in the medium to long term, U.S. real estate will still attract Chinese buyers. Primary reasons include New York City's top schools and that the U.S. real estate market has been among the most stable in the world.
That's just the end of phase one. The simple fact of the matter is China has a lot of wealth. It needs to be invested in places.
I think the primary reason before coronavirus or after is the same for Chinese buyers to purchase here. is, first of all, it's a very stable place, especially in New York. It's a safety haven.
It's not something that's tied up in the broader trade disputes. It's not something that is happening because of a sense that maybe people in the United States don't like Chinese or Chinese don't like people in the United States. It has nothing to do with it. It's these investors who got a little too far ahead of themselves, just rationalizing their operations moving forward. I think we will see many Chinese investors looking around the world for opportunities in the future.